First, thank you all for coming and welcome you to the FleetWorks webcast. Over the next 30 minutes, we'll be providing you with some insight from seasoned industry professionals that will hopefully help you develop your understanding of vehicle fleets and give you some thought-provoking ideas if this is your category. The subject we'll be exploring today is international lease companies and their relationships with their corporate clients, how that may have evolved over the last few years, and what is the direction of travel. So firstly, should we do a few quick introductions for all those who don't know us? Ivor, would you like to introduce yourself and your background?
Okay, thanks, Graham. Ivor Johnson, recently retiree after a 40-plus year career, primarily fleet focused, working in various different guises as a recipient of fleet management services, a supplier of fleet management services, and for my sins, a consultant on fleet management services. I've worked both nationally in the UK, but the majority of my time has been spent on international fleet management, working with various different suppliers and advisors along the way. So great to be invited and great to see both Paul and yourself, Graham.
Thank you, Ivor, and good to see you too. Paul, would you like to do similar?
Yeah, hi everybody. So I'm Paul Hollick. I have two roles. First one is I'm the chairman of the Association of Fleet Professionals in the UK, which is the UK fleet manager body. We provide training, education, networking for anybody that is running fleets. We've got just over 2,000 members in the UK. Also, I'm the CEO of Lightfoot Telematics. So we do driver gamification rewards, driver safety and ESG. My background before these two roles, and I've always been involved with the AFP, even from the early days as a finance trainer on the finance course. But I have started off in this industry with a small leasing company called Inchcape Fleet Solutions, which you will now know as Kinto across Europe, as their head of finance. And I moved across to set up a small leasing company for BMW called Alphabet, which is now not so small. And I was there for 7, 8 years, internationalizing that and being part of the ING car lease acquisition and merging the two businesses together. And then after that, I then was the managing director at a company called the Miles Consultancy, where we did mileage management, fuel payments, big data and fleet management platforms, sales to international fleets. So that's me.
Thank you, Paul. And myself, I'm Graham Rees. I'm founder and director of FleetWorks. We've been supporting corporate clients in managing their lessor relationships over 21 years. So I've personally been in the industry for around about 40 years now. Okay, without further ado, I suppose the first question I'd really like to put out there to provoke some form of reaction is, like your thoughts on the international leasing and fleet management industry as a whole, where you feel it is today and where you feel the direction of travel would take it. So should we put that to Ivor first?
A very big question, really. I think the way I see it, certainly from up until I left my last role, is that it was an evolving solution that has gone through in recent years, especially during COVID and post-COVID, quite a lot of change and some challenges that came with those changes. Some of those changes obviously forced upon everyone. And they're still evolving and adapting, I think, to a new way of working. Obviously, I'm sure we'll come on to that at some point, the use of technology in the form of AI and others in order to simplify the solution and improve the efficiency on the delivery of it. Whether or not there's the sacrifice of service quality is maybe a discussion point, as some people look at convenience over cost. And I think that, again, is a direction of travel that we find ourselves in. I think very much, certainly from the larger fleet perspective, which typically I was involved in managing larger fleets, I think the proposition was slightly different for larger fleets because you had some sort of powers of persuasion, if I could put it that way, and influence over the direction of travel. But I think in the mainstream, that was very different, because the buy from a large fleet with thousands of vehicles globally is slightly different from small and medium-sized fleets that you may get, where they don't have the same influence and they're buying off the shelf effectively.
Okay. So thanks for that, Ivor. Paul, what's your take on it?
I think it's an interesting market these days, to be honest. And sometimes if I put myself in the seat of a fleet manager that's managing across 20 markets, I think the interesting thing for me is, and the question that sometimes dawns on me, is choice. What choice do I have? Over the last 12 years, maybe 20 years even, there's been an awful lot of consolidation, not just in Europe, but on all the international markets. What used to be Alphabet also is ING. Arval bought GE. Obviously, with ALD and Leasing merging to create Avons, Thlon obviously changed its ownership to Daimler. There's not a huge amount of choice on the international markets when it comes to traditional leasing solutions. And because of that as well, I sometimes think to myself, if you're in a leasing company perspective in Europe, how do you get a competitive advantage that isn't just price? Because price should be a hygiene factor of doing a deal. How do you provide support to the international fleet community through the products and services these guys want? And creating that differentiation, I think, particularly when you're quite large organizations across the board now in Europe, can be a real challenge for a lot of the leasecos. So the dynamic, I think, has changed substantially because of that consolidation, that power, that buying power as well. And then sometimes I think when you're a international fleet manager, how do you create competitive tension to get a good deal? I just mentioned this just a minute ago as well, cost versus convenience. How do you create competitive tension? How do you deal with your challenges from a macro and micro perspective? So from macro perspective, you want to decarbonize your fleet. You want to make your fleet safer. You want to drive down cost. You want to do it. People are trying to do it with a smaller team. There's AI in the mix as well. And how do you create that choice? And how do you choose which way to go, left or right, in this mosaic of very, not the word not benign, but very general fleet management companies that you can use?
Yeah, sure. So do you feel that through the lack of choice that the lessors are becoming less adventurous when formulating partnerships or solutions for their clients?
I think it's difficult because, dare I say it, I think now Europe is not like the States, and Europe is not one market. And to create a topco that has to cover 30 different markets from Turkey or South Africa in some instances, all the way across to Ireland and up as far as Finland, can be quite challenging to make sure that you've got the best of international products and services that suit everybody. And particularly when you're an international fleet manager, that data quality is hugely important to steer and optimize the utilization of your fleet and understand exactly what's going on across all of your markets, but still create the services that are quick and nimble for each of the markets that your drivers need based on the vehicles that you're deploying as well. And that's where sometimes there are challenges where, how as a big lease code, do you still create local market designed serviced solutions while still also needing to provide an international fleet solution and products and services across every single market and keep them as consistent as you can? Because that's what you do when you've got a brand. You want that level of consistency. You open up a bottle of wine, bottle of Whispering Angel, let's call it. You expect that consistency. And how do you expect that consistency in each and every single market is always quite challenging, I think, for the international leasecos.
Sure. So you see perhaps that brand and brand consistency is a bigger driver than being able to service those clients in a flexible and focused way?
I wouldn't say that. I think there is an element of brand consistency, but of course the local markets need to service those local market CFOs and the local market fleet guys, if there are those people there, and particularly the local market drivers. And sometimes where international service deliveries can be quite difficult is creating that consistency across all the markets that you need and have all that regional coverage. And even if you might only have 8 vehicles in Portugal, they still need to be serviced in the same way as some of the other markets that are much bigger.
Yeah, So that's a pricing issue, really. Is that right? Either you've worked these deals across multiple markets in recent years, I know.
Yeah, I wasn't going to say reference on pricing. I think, though, Paul touches on a really interesting point, is that if you look at the creation of some of these organizations, it's through acquisition rather than the old lease plan model where they wanted to grow everything themselves. So everything, they had a degree of consistency. But so how some of these large organizations have come about obviously have an effect, but more importantly is each of the markets are different. And especially you look at Europe. Europe has a lot of variation in terms of what you can and can't do in some of the markets. Sometimes through legislation, you can't do the same. But you go outside of Europe, looking at a market like Japan. I remember when we first engaged seriously with Japan to try and understand what it was that we were buying. They wouldn't even disclose to us what the residual value or interest rate that was being applied in the lease terms. It was truly a closed-end lease with no insight. So there are a lot of cultural differences in the supply chain that need to be overcome. And as I say, if you're a small company, Paul mentioned companies have large fleets in certain markets and in others, they're very small. And trying to leverage those smaller markets to try and get the same product or a similar product is very difficult when it ultimately comes down to volume, your influence over it. So I think it's a very complex market. I understand, again, why they want to keep their brand, but certainly underneath, scratch the surface, and the products that they provide are vary by market. And that was certainly one of the frustrations we had. And Paul touched on a point which still gives me nightmares, is data and the provision of accurate data. That conversation has been going on since sort of the leasing fleet management services started. And I still don't see a solution, but hopefully with AI, that becomes more interesting. But I think you've got a very mixed bag once you scratch below the surface of the companies.
Yeah, so it's interesting you mentioned about data, because that's one of the key points that FleetWorks works with, obviously, because we're collecting data across multiple countries and trying to make sense of that, code it and account for it in similar fashion for our clients. And yes, you're absolutely right. The data that you can actually get out of the systems will vary across those. One lessor that we work with across a number of markets for a single client, and the data systems that they have within their organization delivers different data points for similar services across each of those markets. And not all those data points that are negotiated into the contract either. So those are particular challenges that we find. But do you feel that in recent years, the clients themselves have done themselves a bit of a disservice, perhaps, by generalizing procurement practices and focusing on certain elements of the fleet deal and for short-term gains, perhaps?
Maybe if I go first and then Paul jumps in. Certainly from my perspective, looking at some of the companies that I've worked for, the appetite to invest in internal management in order to be able to manage the supplier and the solution that you buy, that the appetite for that investment has diminished. I think that's always been the case ever since been involved. But as we'll be aware, when contract hire came along, a lot of sales pitches from leasing companies where you don't need a fleet manager, we'll do everything for you. It's all bundled up, all into one price, all neat and ready to go. So I've certainly seen over a period of time a lack of appetite internally within organizations to make investment, which for me, I think is a very dangerous path to tread down. And as you say, procurement in a number of organizations became king because cost is king. Looking at managing the bottom line and managing that expense, and fleet isn't getting any cheaper, is really important. So people cost a lot of money.
So, Paul, I'm sure you have an opinion from an AFP point of view.
I have an opinion about everything, don't I? But so I think when I was in leasing, I really liked having what I would call a sophisticated buyer. So if somebody knows what they're buying and what they're buying the services for, that is I believe, a lot better, because you can then have a proper conversation about the reasons why you are different over and above the cost agenda. There is no doubt in my mind that the customer, the fleet, internal fleet, must own their own strategy. They can't outsource that to third parties. If they do, they'll get burnt with excessive costs and lack of control. And also, if you're outsourcing your strategy to third parties, you've got no control internally of your own strategy, your own relationships with the board. But there have been quite a big rise in terms of not just European fleet managers, but also European fleet procurement managers. And if they are those European fleet procurement or global fleet procurement managers are just completely focused on cost control and upfront cost, or even total cost of the contract, without realizing that RVs change, vehicles come and go. I've seen the most bizarre tenders before where sometimes you have a BMW, I'm sure you have I'm sure you have a BMW 635 out of the 5 vehicles that they're testing in terms of the price point, knowing that vehicle as a seller, that vehicle is never really going to be ordered en masse. And of course, when you add in the optional extras, then things change as well. And if you're selling to somebody that's just looking at price and just a static list of price with no level of differentiation and not understanding the culture of the supplier that they're going to have a partnership with, because everyone's talking and needs, I think they need a proper partnership. I like to speak to my customers and sit down with them every year and say, what are your headwinds? What are your challenges of your organization? What are you looking to do? And how can we at Lightfoot support that? And I think the big leasing companies are doing that as well. But you need a sophisticated buyer at the other side to be telling them, this is what I'm looking for and these are the challenges. And this is what I'm looking for from you. And not just this year. Fleet is a 7-year or 6-year holding plan as well. So it's not a one-off silver bullet to get your cost control for 1 year. You need to plan for the long term.
Yeah, I would agree that we see this a lot. We see a lot of jam today, procurement managers looking at putting together deals, which gives them an instant win. And maybe it's because of the precarious roles that these people have in organizations. They move on very quickly and they need to make their mark very quickly in these organizations. But we've certainly seen plenty of those, Paul, so I can share that feeling with you. And perhaps that's what's led, there's a sort of proliferation that we've seen in recent years for people wanting to look at multi-bid solutions as a quick win solution for their organizations, commoditizing the leasing company, where in fact, the client is being commoditized by the leasing company, because you don't have to serve that client with all the bells and whistles that you might do if you had to try and keep them engaged for 4 years. You only have to serve them for the transaction of the lease. So so I would agree with you that that seems to be a direction of travel, probably driven by the procurement professionals that are leading these processes. And that perhaps because there are fewer people of your members, if you like, the Association of Fleet Professionals within the organizations, adding that level of expertise to the process.
And I think it's important for the buyer to realize how the leasing companies or the supply chain are making their money. I don't think there's any aspiration, by the way, for procurement managers to be able to drill down to a cost that then the supplier can't provide the services that they're actually describing in the statement of works. But I think it's very difficult if you're blinded to where the money is being generated and how they make their money. Not everybody funds vehicles in the same way and makes the margin on the funding. Not everybody uses the same fitment repairs for tyres and glass and body shops. Then you've got data services. You've then got consultancy services on top around, obviously, decarbonising fleets, while you're still trying to create a level of competitive tension as well. It's challenging to find the right suppliers.
Yes.
And again, just on that point, and Paul alluded to this earlier, is with his own clients, he sits down and asks them where their challenges are, what their strategies are. And we're focused on the procurement people who are doing the negotiation with the leasing company, but it's not necessarily them who are setting the overall strategy. And quite often that strategy is a real blunt one. We want the best price possible. And it's not necessarily looking at value for money, it's the best price. And when you look at procurement, they're measured, typically their savings are measured and projected forward what they would save over a 3 or 4 year period. No one goes back to see if they deliver those savings. Yeah, it's all at that point in time when they submit their project that they look at and they're seeing these are the savings that this will deliver, and they're theoretical savings. Leasing companies have ways of managing that to make sure that they do ultimately survive because they have to make a profit. But I think I always said one thing that I've always noticed all the way through my career is people try to dumb down fleet. It's simply buying cars, running cars. And because most people at some point in their life have operated their own car, they have a very interesting perspective on how easy it should be. And I like the term a sophisticated buyer because it's a sophisticated purchase that you're making. And if you don't understand exactly what it is that you're buying, then it's very difficult to put a value on that, a price on it, and say whether it's good value or bad value.
I've actually, just adding to Ivor's point, I've actually seen some tenders, not necessarily across Europe, but specifically in the UK I'm talking now, where procurement have just gone out and bought the services and then wrapped it to the fleet manager and said, this is who you're using. That's got no long-term partnership or sustainability written over it. That is just a pricing gig. And also go back to Ivor's point, I agree. I've never seen anyone do an analysis 2 years after they've done a deal to make sure they've actually seen the business case that they wrote when they selected that supplier in the first place. That's not to say it hasn't happened, but no one ever goes back retrospectively.
So we've done that on behalf of our clients, and sometimes they're a little bit frightening, particularly with the multi-bid solutions, which the classic in there is that one supplier just becomes completely uncompetitive. So you're back with a single lessor, but with none of the bells and whistles that you could have negotiated into the deal in the first place. But yeah, so I think then what we're saying is that it's a mixture of perhaps less sophisticated buyers, which is, for want of a better expression, dumbing down essentially the approach of the leasing companies to their corporate clients, because they know at the end of the day, it's the money, basically.
Again, just protecting the buyer, having purchased things for years, it's not necessarily in the buyer's control. It's the strategy or the objective of the organization that sometimes ties their hands as to what they can and can't do. So I think being fair to all, and again, with the supplier at the other end, they can only respond to the tender that they're given. And if that ties their hands too in terms of the solution. But
I would like to say, for me, it ebbs and flows. I've been in this industry long enough where you see some companies almost do the hokey cokey with it. So they insource a fleet team, then there's some business change and they completely lose the fleet team, and then they rely on the supplier, and then they realize actually we can't do that either. Then they go back again. And it almost like this perpetual circle of just it happening over and over again, because naturally people don't, particularly people that don't understand the industry. I can see at C-suite level, while there's not a huge amount of value put on fleet managers being within the organization sometimes, unless you actually know all the intricacies, or you're running a very complex fleet of heavy goods vehicles and light commercial vehicles. Sometimes it's being viewed, particularly from CFOs, as being really easy, and it's not.
Yeah, no, I think you make a very good point there, Paul, distinguishing between a professional fleet whereby the business is based on it, a haulage business relies their business is fleet. Whereas if you look at a large petrochemical company with a massive big sales force, the cars are a tool of trade. They're a means to an end. The main focus is the person getting from A to B in order to make a sale. and generate. So it's a tool as opposed to an essential part of it, but nevertheless, it's an expensive asset. Awfully, even the cheapest cars to buy are expensive assets to have. And therefore, I think the need to have a degree of expertise on how to manage them is important for any successful solution. But as you say, that merry-go-round of insourcing, outsourcing is really interesting as well, what's going on in the client space as well as what the supplier space is.
But the direction of travel in that we see. Apologies, Paul. Carry on.
Obviously, in some instances, by the way, where an audit's been undertaken, I'm sure you've seen this as well, an audit's been taken across Europe for a fleet. They've got 11,000 vehicles, but they've got only 9,100 drivers to drive those vehicles. And that happens quite more regularly than you think.
Yeah. So sometimes even the basics of good governance are not in place. We appreciate that. So the direction of travel then over the past few years with the consolidation of the suppliers and the perhaps simplification of the products that are being tabled, would you say then overall that is to the detriment of the clients?
I think that's too simple a statement to make, really. I'm sure the intention isn't towards the detriment of the client. There will be a need to try and simplify things, coming back to Paul's point of trying to get consistency, because if you have consistency, a bit like the McDonald's model, wherever you go, it's the menu's pretty much consistent unless there's a local dish that they put on there. Trying to get that consistency, will help drive efficiencies and savings through the supply chain from a supplier. But that's very difficult when not all of your customers want exactly the same menu that it's there. But I think it's out of necessity and survival that this consolidation is in the marketplace with the big players has taken place, where they're trying to drive down the cost of managing each vehicle on their fleet. And the way in which you can do that is everyone bought exactly the same service, et cetera, it would be a lot easier. And unfortunately, that's not the world that we live in.
And I think market coverage is quite important as well.
Yes.
So a lot of the lease codes have expanded, not because they want to double down in particular markets, but they want a broader spectrum of geography to be able to service their international clients. So they are then the universal global partner of choice.
Yeah. So I suppose we can't discount the fact that the major leasing companies are owned by banks, and the bank's primary focus is to make money. So is any of this simplification and consolidation then just driven by bottom line rather than altruistic factors?
I think bottom line drives every business, unless maybe if it's a listed business, that's what the stakeholders want to see is low cost, high sales, good profits, healthy margin. Yeah.
But
and
not focused on the client service per se, but on the margins.
Yeah. And that's why the shareholders invest, is they invest to get a return. So certainly with the larger companies where they are ultimately, it's the shareholders have the biggest voice on that curtails, exactly what they can do. And they've got to try and drive efficiency through the business while continuing to deliver the service, but in more efficient ways. And that's very difficult when you're buying something that isn't a commodity. The funding element is a commodity, and it can be done, as Paul said, in various different ways that you can do it. But the services are services; they're not a commodity, and that's the part that's very difficult to do. And if I was looking from a fleet management company's point of view, leasing company's point of view, you've got to rely on technology and the use of that technology, AI in particular, whilst everyone's very fearful of it in order to drive some of those efficiencies. So they continue to be able to then make the margins, but still deliver the service, albeit the service may be delivered in a slightly different way. And we all know no one likes change, but change has to come about.
And I just to add, I don't think anybody, I think business, Ivor's right, business are there to make money, and I don't think there's anything wrong with that. So
No.
at least those are there to make money, that's fine. I think the growth has also come to try and create a level of competitive advantage over others, of course. So if you get certain scale and size, I'm sure that OEM rebates, local market rebates, tires, glass, all become a bit cheaper as well. So by the growth, it's not just about the bottom line, it's also to get a competitive advantage as well.
Yeah. Okay. So do you see then with electrification of vehicles and the servicing costs reducing dramatically in actual fact and people driving fewer miles, which also drives this? Do you see that? And obviously the service element is the most variable and the hardest part for the leasing companies to deliver. Do you see this coming full circle and the leasing companies eventually just being interested in the funding of the vehicles and the servicing being completely automated through the dealer networks in the future?
I think when I assume what you're looking at is a future where everyone's driving an electric car. And as we all know, electric cars don't require the same kind of mechanical maintenance as your traditional petrol or diesel ICE vehicle would be. And it's interesting to see on that because it's not just fleets. You look at a dealership, a lot of their money comes from the servicing aspect of it. Absolutely, that has to be a change, Graham, in order to accommodate the fact that elements of the service will go down. Other elements, like repairs, for instance, will, if anything, get more complex because of all the technology that's built in there. Maybe it's a drop in maintenance, an increase in repairs, but I still think there's a requirement. You're still going to have tires and those elements, but in some ways it will help simplify the role of the fleet management company because they've got less to manage, less complexity to manage.
No. I think it's interesting. I can only see leasing companies going deeper into products and services rather than the other way around.
Interesting.
I think particularly in the UK, leasing companies are losing a lot of money on e-cars being sold because the RVs performance or remarketing not doing particularly well, and there not being a particularly great used car market in the UK to buy those EVs. I think some of that losses have been propped up because of those maintenance budgets they might have set in early days, actually having some surpluses. I think vans is still a generational issue in terms of decarbonising van and heavy goods vehicles across Europe. And that's for all of us to try and sort out. We can't leave it for the next generation. And there are more issues with vans than anything around vehicle downtime, because you can have the best plan in the world, but if the drivers don't charge up when and where you need them to, there's a fundamental problem. And I think everyone's looking for additional revenues to cross-subsidise against the finance funding. So I can see leasing going more into EV charging, into EV consultancy, into mobility solutions, not just car club, but proper mobility and travel. And we still see this world of fleet and travel colliding at some point in time. I know COVID's gotten away of that, but this is still going to happen. And don't forget, we've still got autonomous vehicles coming as well. And that will then mean that the rental companies then have a bit of a competitive advantage in this space because they've got the stock of micro-leased vehicles that can move around Europe as well. So it's going to be really interesting, but I can only see leaseco's going further into services.
Okay. So that's interesting. Yeah. So I can see why, obviously, because it does dilute their exposure to the obvious, which is the residual values on the vehicles. So they've got additional revenue streams that kind of reduces that exposure. Ivor, what's your thoughts?
No, I concur wholeheartedly. I think they're going to be different services because the needs are going to be different because the product's different. But I agree, the provision of services, and it's a bit like if you go in for a car wash and you have your gold, silver, bronze, and platinum or whatever. The more boxes you tick, the more opportunity there is for the organizations then to continue to make money out of delivering fleet in there. So I agree. And one of the things that baffled me, coming back to an earlier point you made when, Graham, where you said the leasing companies are owned by banks, you've also got the OEMs captives, and some of those are multi-branded, others are just their own. And I, for a long time, couldn't see why they haven't just completely dominated the market and done away with the independent leasing companies, because they make the product, they sell the product, they service the product in a lot of the cases. And I see there's an opportunity there where they go from being just manufacturers, that's one part of their portfolio, but providing a greater suite of services and keeping everything in-house. So again, that may be another area that we see that they play a bigger role in the marketplace.
Sure. So final thought from you both. So what do we think the products and services of the next decade will look like?
I'll let Paul go first.
Yeah, I was waiting to see what you said. So I think AI, by the way, will have a profound effect on our industry and every organization in the world.
Yeah.
So AI has got some really great strengths and some benefits. And I think the tools, particularly around, and I've touched on this already, but around data and consolidation and the changing landscape, I'm really excited about what AI can deliver. It won't replace the fleet manager, though. That's the most important thing. The strategy still needs to sit with the company, not the supplier. But what it will do is really start elevating the data stack but you need the data in the first place to put AI on top of it. So data is still going to be hugely important in terms of the quality. The AI functionality will commoditize the market a little bit more from a pricing perspective. So therefore, services become even more important. ESG, in terms of EV sustainability, I've been saying this across the board to most fleet managers I speak to, that the supply chain the fleet manager has in 10 years' time is likely to be completely different than what it is now. AI suppliers, maybe not even fleet software, potentially. You might be able to have an AI-based infrastructure without even needing that type of thing. I can understand why the actual pure leasing might be more commoditized, but there will be EVs, autonomous vehicles, travel, fleet colliding together as well. So all the people that you give a car allowance to, but they take the train all the time, is that right or wrong? It's going to be really interesting.
Yes, sure. I think there's obviously individual challenges for those, for the mobility market, I think, and herding the cats, which are the various suppliers in the chain there. And again, changing moments, we see AI, you've mentioned, I believe that's the game changer in all of this. And it's changed in ways that we probably don't quite realize yet. How about yourselves?
Yeah, I'd say if you just accept AI as a given, because it's, as you say, it's hard to get your head around exactly some of the things that can be done. And there are some very creative people around. And I think once the leasing companies and the OEMs get their head around it, the use of AI would definitely change the landscape as we see it. But I agree with Paul. I think companies will still need to have a strategist for fleet, their fleet manager, ideally someone who's educated to understand that. Because not only is it the strategy, through my years of certainly on the recipient of services, the two main things that drove cost and controlled cost or didn't control cost, as the case may be, is the policy, that governs what they buy and the supply, and then also the behavior of the individuals. So the drivers themselves and the policy that then govern them, if you like, they again, in my opinion, will continue to have an important role going forward. but it will be a very different world to the one that I've recently come from.
And I think to add, Graham, that there are, just on Ivor's point, there are tools now that are arguably freely available, and it will continue to make the driver, the employee, more conscious about their own behaviours, and then providing tools for them to elevate the choices that they make in a positive way and rewarding those good behaviours as well. So the tools that are starting to come out in the market now more and more aren't necessarily we get the data and then we sit there, procrastinate, and then write policy. How do you then push that out to that employee to make them conscious about the choices that they need to make, capture that data on an ongoing basis and surface that data to them on a regular basis as well, and then make sure that they understand what is good behaviour and what isn't good behaviour based on the policies that are being put in place by the employer.
Yeah, understand that. Certainly we have data, then we have information from that data, but it's the intelligence that you apply to that information is what is going to make changes. And the other part that I'd just like to add at the end of this is that fleet is a very interdependent category in that it spreads right across the different functions within an organization and touches them whether they'd like it or not. And at some point, there needs to be somebody orchestrating that everybody is on the same page and moving in the same direction. And I think the fleet manager's role, or certainly a seasoned fleet professional in your business, is essential to ensure that continues.
Just maybe to build on that, and again, recognizing fleets come in varying different sizes. Most companies, would go to an external independent source for tax advice. Even small companies will go to a tax advisor to help them with tax advice. And if you look at fleet and recognize that it isn't a simple purchase or a simple solution, there's always the option then at looking at an independent advisor that helps those smaller clients and the larger clients in order to help them develop their strategy and policy that they put in place. And certainly that's something that I advocated through my career, the use of such advisors to do it. But they need to be specialist advisors with the knowledge to do it. And that's where I think organization, where Paul chairs, is really important, that people are educated in fleet management so that they're better positioned to make decisions and give advice.
Important that. Great. Thank you very much indeed, everybody, for attending today. I really appreciate that. I think it's been a really constructive discussion. The conclusions are, I think, that the direction of travel is probably towards further simplification and probably towards further consolidation, if we're realistic. But with AI and technology moving at the pace that it is, the other players may come into the game and be perhaps more significant going forward, the likes of the manufacturers. And no one's really talked at this point about the Chinese manufacturers and their growth in all of this and what cards they may throw in at some point. Any parting thoughts from you guys on this podcast, or are we happy to conclude?
No, happy to conclude, but thank you very much, Graham, for the invite. And it's been good to have a chat about fleet.
So, 5 things to take away from today. The market has consolidated, but that hasn't made fleet any simpler. If anything, it's raised the bar for anyone buying or managing a fleet at scale. Understanding how your leasing supplier actually makes money isn't a nice to have, it's the starting point for any serious commercial conversation. Procurement that chases price without retaining strategic expertise tends to pay for it later, in service quality, in supply leverage, and in loss of control. AI will genuinely improve how fleet data is used, but it supports good decision-making. It doesn't replace the people making those decisions. And on EVs, the service model is changing, but the need for fleet management expertise isn't going anywhere. If anything, the complexity is increasing. Thanks to Paul and Ivor for a really honest and informed conversation today. And thanks to everyone who joined us. We hope it was useful.